there is still going to be the potential for an upside move. And one thing that helps in these situations, and in almost every situation really, is being mindful of the larger time frame pattern. So in this case, a pattern that seems to be developing is a bull flag because we are in a bullish environment. So there are two possible options here. And for those of you who follow me on X, on Twitter, I posted this chart last night, and it's the 60-minute or hourly chart of the S&P. And there are two possibilities here. One is that this is a bull flag, and now we're going to consolidate and then break out to the upside, right? And we can see that we're getting volatility contraction, and that quite often leads to volatility expansion. So the upside possibility is that we put in a successful breakout above this developing downtrend. We hold the uptrend line. This we can interpret as a bull flag, and then once we get the breakout, that's the confirmation that it was indeed a bull flag. But until we get that breakout, we don't know. The other option is that perhaps this is a false breakout from a larger multi-day range, right? That's the other option. Now, if we get a directional move below 49.48, that would trigger the bearish scenario, right? In that case, we would have to change our interpretation of this pattern from being bullish to now being bearish. And that's why that 48 to 58 area was so key today. It was primarily because of the larger time frame pattern that was in play, and the implication of breaking below here in a meaningful way and breaking out above initial resistance in a meaningful way. So right now it looks like a directional move is brewing under the surface here, right? We're seeing volatility contraction. Today's range was relatively narrow, and quite often that leads to volatility expansion. So that's a move that we could get overnight or tomorrow. So as we head into the overnight session, on the downside, the 48 to 58 will continue to be key support for us, right? As long as that zone is holding, we can still technically, eventually, head higher. And because we are in a bullish environment, if we have to pick between the two, if we have to take an educated guess as to is it a bull flag or a false breakout, which is bearish, we should go with the bullish pattern because it's happening in a bullish environment or bullish market. So if we have to pick one side, then we're going to assume that it's a bull flag and it's a situation where we're just consolidating and balancing before the market puts in another strong upside move. And in the event that we get a breakdown below 48 to 58, in that situation, we have to then also be willing to flip our bias, at least on the intraday or short-term time frame. It doesn't mean that, the market has to completely go to hell and, it's going to crash now. This is a pattern that's happening on a daily or hourly chart, so it's going to have a lifespan measured in hours or a couple of days. So eventually, we can still get oversold into good support, and the intermediate time frame bullishness can still kick in, but that's later. That's, if the market sells off into a better zone. Right now, 48 to 58 is the zone that we need to be concerned with. If that holds, then there's still potential for ES to eventually break out above this, trend that's developing and break out from this narrow range and consolidation. And if we break to the downside, well, then you're going to have that trapped buyers scenario come into play, right? Because when you have a pattern that looks bullish, but it doesn't actually resolve in a bullish way, then you have market participants that are caught on the wrong side. And that means anyone who bought within this range, they are going to be the first to liquidate, right? Anyone who bought over here is going to be in a losing position if the market starts putting in a significant breakdown. Now, we can take an educated guess on where their stops are going to be. Most likely, there's going to be a pocket of stops, a group of stops underneath 37.75, and there's going to be another pocket of stops underneath 25.75. So if 37.75 gets taken out, you could see another flurry of sell orders come in, and that can then push the market towards 25.75, and maybe we get a bit of short covering there, but not a very high confidence area at this point. And if 25.75 gets taken out, then that's where you can get kind of a cascade effect and end up getting a downside directional move into the 49.16 high volume node, where buyers can then step in yet again, and the lower you push, the higher the odds of buyers stepping in. So that's the idea if we get a downside move, but again, we first need to put in a directional break below 48 in order for that scenario to trigger. Now, if you start breaking out to the upside and you take out the 71 to 81 resistance, then again, you can trigger some stops to the upside. And a successful breakout above 71 to 81 will likely result in at least a move back up into the 92.75 to 97.75 area, which is basically this recent high. And at that point, as long as momentum's with us, we will likely end up testing the strong resistance at 49.99.5 to 5,010.5, and then maybe we get some reaction or something over there. You can almost kind of visualize it in your mind that the market kind of pushes up here, and then maybe there's like a 38% retracement, and then this is the inflection point from that point on, right? If we only react and then consolidate, then maybe we break out and go higher. If we fail and come right back down, then the whole interpretation gets adjusted yet again. But that is essentially the process of reading the market, and it plays into our trade planning as well. So those are the ideas as we head into overnight. I see a couple of questions. Let me cover those, and then we will wrap up.